Hey everybody, so in this video, I'm going to explain to you why restaurants may be in trouble in 2023. Right now I am on the IRS website, as you all can see, and I'm going to read this little excerpt for you. So it says right here, the title, Businesses can temporarily deduct 100% beginning January 1st, 2021. Now, starting right here, it says, under the Taxpayer Certainty and Disaster Relief Act of 2020, the Act added a temporary exception to the 50% limit on the amount that businesses may deduct for food or beverages. The temporary exception allows a 100% deduction for food or beverages from restaurants. Now right here it says beginning January 1st, 2021 through December 31st, 2022, businesses can claim 100% of their food or beverage expenses paid to restaurants as long as the business owner or an employee of the business is present when food or beverages are provided and the expense is not lavish or extravagant under the circumstances. Now, there's this little second part here where it says, where can businesses get food and beverages and claim 100%? So it says right here, under the temporary provision, restaurants include businesses that prepare and sell food or beverages to retail customers for immediate on-premise and or off-premise consumption. However, restaurants do not include businesses that primarily sell prepackaged goods not for immediate consumption, such as grocery stores or convenience stores. So basically, it's saying to get this 100% deduction, businesses need to be purchasing from restaurants. This cannot be applied to grocery stores. So normally, under normal circumstances, groceries and restaurants can only be deducted 50%. But with this special rule in place, for basically the entirety of 2 years, businesses were able to deduct 100% of their restaurant-related expenses. So let's say that your boss decides to do some sort of team building event. And he or she says, hey everybody, let's go eat at Outback Steakhouse. It's going to be on the company credit card. So what exactly does that mean? It essentially means that, hey, you know what? This is a business-related purpose. We're going to go out for a team building event. And all of this money that we're spending at this restaurant, it can be deducted off of the company's revenue. So essentially what happens is that you end up paying less tax. So let's just go through a sample scenario here. All right. So, in a company's accounting, they have different accounts, okay? So let's say for my grocery account, I'm going to call it 5001. That is the company code for grocery expenses. So a company will have something called a chart of accounts, where basically every single expense or revenue account will have a certain number associated with it. So here, I'm going to call the grocery expense 5001. For the restaurant expense, I'm going to call it 5002. Now, groceries are 50% deductible, and restaurant expenses are 100% deductible. So let's just run through a few scenarios. On the 1st of 2021, let's just say my boss, he or she decided to buy a bunch of bagels for everybody in the office, okay? And they spent $70 to do this. Now, this is just like a little morale boost. It's like, hey, everybody, you did a great job. Here's some bagels. I hope you all enjoy it. So this $70 is a grocery expense because I went to the grocery store, or my boss went to the grocery store, and they bought $70 worth of bagels, cream cheese, and whatever else, maybe some fruit. Okay? So this is not a restaurant-related expense. It's already pre-prepared. So it's only 50% deductible. That means from my income, I can only deduct $35 of this $70 expense. Now, let's say on January 2nd, I decided to buy a bunch of snacks for the office, okay? Let's just say that it was somebody's birthday, and I wanted to buy Doritos. I bought a bunch of Doritos. I bought a bunch of Cheetos. I bought some Sprite, Pepsi, and we basically had a mini little party, okay? So this is not restaurant-related expenses again. So here I spent $80, and only $40 is only $40 is deductible from this $80 expense. Now, let's say on January 3rd, we all decided, as a team, we all decided to go eat at Olive Garden, okay? And we spent $90. Now, this $90, because this is a restaurant-related expense, it's 100% deductible. So I'm putting this expense under the 5002 account. So with my $90 expense, 100% of that is deductible. So I'm going to deduct $90. Now, let's say on January 4th of 2021, I took everybody out and we decided to go eat ramen, okay? And we spent $100 on ramen. Now, this also goes to the 5002 account. So it's 100% deductible. So of this $100, 100% is deducted. So $100. Now, you probably get the point by now. So let's go ahead and let's calculate the entirety of these deductions. So we're going to do a sum function equals sum. Boom. And then we're just going to add this all up. So that's $375. Now, let's say for revenue, let's just say I made, let's just type it in right here, revenue. Let's say I made $1,000, okay? Now, from this $1,000, I can deduct $375. And let's say our tax is, let's just say it's 20%, okay? So how much tax am I actually going to pay? Well, I'm going to pay a tax of $625 times 20%. So my tax is $125. So I essentially saved some tax because I spent quite a bit of money on employee morale. So just by buying bagels, by buying snacks for somebody's birthday, or taking everybody out to go eat dinner, we're boosting employee morale. And that is going to get expensed off of our revenue. So this is deducted. So we're essentially paying less tax. And we're also boosting employee morale. Now, what happens if this restaurant account in 2023 becomes 50% deductible? Now, let's just go back and let's change this to 50%, so 0.5. Well, that changes a lot of things. Now, now I'm deducting less off of my revenue. And my tax is going to be $155. So, are businesses going to be incentivized not to eat at restaurants? Because in 2021 and in 2022, they were very much incentivized to go eat at restaurants to help the economy out. And, they're going to get 100% deduction off of their revenue. So with this rule essentially just expiring, well, now businesses, they only get a 50% deduction on their restaurant expenses. So is it possible that all of you who are working at these nice tech businesses or whatever that are getting restaurant meals basically every single week, is that going to be reduced? And are companies basically going to say, hey, you guys, guess what? We're not able to do these weekly restaurant meals anymore because we're in a recession. When in reality, it's just that this deduction benefit was eliminated. So I hope you guys enjoyed this video and found the importance of this. Have a good one.